how much is American soft power really tied to the currency status of the US dollar? Because American soft power goes well beyond its currency. You know, think of Hollywood, think of Coca-Cola, think of its great universities, the education system, particularly at the higher level, American science, all that contributes to American soft power. So how important is the dollar for that?
Oh, I think it's really critical because I'm a strong advocate for the United States' leadership in biomedical research, for example, and that's being badly endangered by this administration through proposed a 40, for example, a 40% cut in the budget of the National Institutes of Health, and growing concerns about the ability of the United States to support objective research in any way. But economics really matter. The size of the nation's economy, the vibrancy of that economy, the size of its trade, and the degree to which it controls key commodities is a vital source of soft power.
Good afternoon, everyone. I would like to welcome you to the Krasno Global Event Series. It's very nice to see all of you, so to speak. We have once again a global audience from North Carolina and from across the United States, and indeed also from abroad, not least from Germany and the UK. I'm Klaus Lauers, and I'm the Richard M. Krasno Distinguished Professor of History and International Affairs here at the University of North Carolina at Chapel Hill. I've run the Krasno Global Affairs series since 2012, and our point is to bring some much needed sober thinking and analysis to global affairs. We want to avoid the overly emotional and vulgar debate which has become all too common today. And we are non-partisan, of course. Today, our guest is Karen Petrou. Karen is a very prominent financial analyst and knows all about the United States economy, its financial system, and the US dollar. Thank you, Karen, for joining us today. How are you doing today?
I'm intimidated. I certainly don't know all about all those things, but I know a bit, so I'll do my best.
Well, you know very many things. I would say you know much more than most of us here.
Thank you.
Today, we will talk about the status and power of the US dollar as the world's reserve currency. Why gold glitters as the greenback turns brown. The future of reserve currency status and American soft power. That is the title of our event today. I would like to encourage our audience to submit questions via the chat function of your Zoom screen. Our two Krasno assistants today, and today it's Zoe and Andrew, they will select your questions and read them out to Karen and to all of us. After our initial conversation, Karen will be happy to answer your many questions. Let me introduce Karen Petrou to you briefly. Karen Petrou is a co-founder and managing partner of Federal Financial Analytics. It is a privately held company that since 1985 has provided analytical and advisory services on legislative, regulatory, and public policy issues that affect businesses and other organizations in the United States and indeed abroad. Karen is a frequent speaker on topics affecting the financial services industry. In addition to testifying before the US Congress, she has spoken before the Federal Reserve Banks of New York, St. Louis, San Francisco, and Chicago. And she has also given talks at the European Central Bank, the International Monetary Fund, the Japanese Parliament, and many other governmental, industry, and academic groups. Karen is the author of the book Engine of Inequality, The Fed and the Future of Wealth in America. She has also authored numerous articles in publications such as The American Banker and the Financial Times, and she is frequently quoted as a bank policy expert in many newspapers. For some reason, however, Karen has not attended UNC Chapel Hill as a student. Instead, Karen is an honors graduate in political science from Wellesley College. She also was a special student in an honors program at MIT. She earned an MA from the University of California, Berkeley, and she also was a doctoral candidate there. Karen has served on the boards of banking organizations and now sits as a director on the board of the Fidelco Guide Dog Foundation, and she is the chair of the board of directors of the Foundation Fighting Blindness. And in 2019, Karen Petrou and her late husband Basil were named visionaries by the Foundation Fighting Blindness and received the Berman Award in 2022. Let me quote what some experts have said about Karen Petrou. They have referred to her as the sharpest mind analyzing banking policy today, and also one of the most prominent non-governmental voices on financial regulation. And then even here's one who says, Karen is a genius. Because of the quality of her work, she is one of the most listened to people in Washington, D.C. Whether Treasury or the House or Senate or the Fed, everyone pays attention to what Karen has to say. Wow, this is very impressive indeed. Thank you, Karen, for finding the time to join us today. It's greatly appreciated.
My pleasure.
Let me ask you straight away, what actually is the reserve currency status of the US dollar? Is that an advantageous thing for the United States, or does it also have quite a few disadvantages?
A reserve currency is the currency that the world turns to, either for trade or as a safe haven for value, especially in times of stress. And reserve currencies are typically associated with dominant nation states. The Dutch guilder was the world's reserve currency up through the mid-18th century when the pound sterling took it over. And the pound sterling remained the dominant global currency until the Second World War, when after the World War, the dollar took over that role and became the essentially only global currency from 1946 and still through now. A reserve currency is the currency which, as I said, people choose to trade in. For example, currently 49% of all global trade is accomplished through dollars. But that understates its importance because, for example, all oil and gas trades are in dollars. So you can see the United States' influence over global markets if, for example, it starts to sanction Russian oil companies. Because you need to trade in dollars and dollars need to clear in the United States, if the United States changes its willingness to accept dollars for a particular cause, that affects the global foreign policy framework and exerts soft power.
Thank you. So are there only advantages to being or to having the reserve currency that your currency is the reserve currency of the world, or are there also some disadvantages?
I can't think of a disadvantage. We're really focused right now on what happens if the dollar loses, the almighty dollar loses its edge. And one clear consequence of that is that the cost of raising the federal debt that funds the deficit goes up. So taxpayer costs become higher and higher, which has a lot of adverse growth and stability implications. If the US banks are also the dominant banks around the world for global trade and finance. Yes, there are huge Chinese banks, but because the Chinese renminbi is not a reserve currency, and we can talk about why that is, the China banks just do not have the influence because China does not have the influence through the global economy that the US does, as long as we have the reserve currency.
Thank you. So if it is so advantageous to have the world currency, the world reserve currency, are there not other countries trying to compete with the United States? The euro comes to mind, also a Western currency and the second largest currency or second strongest currency in the world. So doesn't the euro want to replace the US dollar as the reserve currency?
It Certainly, there had been talk at the European Central Bank and governments about wishing to do that, but there are numerous criteria for a global reserve currency. And one is the size of the economy supporting the currency, and the US is still far larger than that. The other is the liquidity and convertibility of the currency. And again, the US is much more widely accepted than the euro. Now, the other factors for being a global reserve currency are an independent central bank, political stability, sound and predictable policy, and a strong rule of law. And here the United States has of late lost ground, and that has led to even more discussions about the need for alternative global currencies. And we also see global central banks bumping up their gold purchases, so they reduce their dollar reliance. But it would be very difficult for the euro in any time in the near future to surpass the dollar as a reserve currency, and the same is true of the yen.
Explain that to us, because there are more people living in Europe than in the United States. It's a very strong and reliable economy, despite some current problems. And also there's the European Central Bank in Frankfurt. So why would it be so difficult for the euro to replace the dollar as a world's currency?
Because while there are many people in Europe, the economy is not as large as the United States. And more importantly, there's no such thing as a quote euro bond. Remember what I said is that people want to hold their savings in a reserve currency. They want that stability. And the Treasury bond market, the securities that the Treasury, United States Treasury issues to fund our deficit, about $29 trillion worth at the current market, dwarf those from each of the European nations. And of course, because each of the nations issues its own sovereign debt, each of those markets is nowhere near as liquid as the giant treasury market.
Mm-hmm.
The currency has to be paired with an easily accessed, highly liquid instrument in which you can hold that currency. And those are the sovereign bonds of the issuing nation.
So would you see that in the future, maybe 10, 20 years, the euro would be able to replace the dollar, particularly if the unreliability of the current administration, the undermining of the rule of law and all that continues?
If you can persuade the European nations to give up their own central banks, Banque de France, Bundesbank, and so forth, and agree to issue a euro bond, maybe. But it takes that level of political agreement to do that without a sovereign debt instrument large and liquid enough to support broad use of a currency in the international markets, both for trade and as a store of value. It won't happen.
So in your view, for the next 10 or 20 years, we will continue to see the US dollar as the global reserve currency. Is this correct?
Well, it's an interesting question. I mentioned before the importance of China and Russia and the global South. Many decades ago, I think it was Giscard d'Estaing called the United States reserve currency status and quote exorbitant privilege. And the US has been using that privilege with a particularly strong hand in recent years for various forms of sanctions. The most important of which of late are those against Russia, but we've also used them strongly against China and North Korea and other nations. And now increasingly the President Trump, is using them with far less clear foreign policy purposes against nations such as Brazil, because he was angry about the trial of Bolsonaro, or Colombia, because he didn't like something the president of Colombia said. But the United States is wielding its exorbitant privilege with more than a bit of abandon. But until the Chinese government comes up with an alternative dollar to dollar clearing, it is vital that the transactions in a reserve currency be liquid, predictable, and do not carry the kind of foreign exchange risk that comes with an autocratic nation. China and Russia have been experimenting with an alternative global payments network that would rival an entity called SWIFT, which is the way dollars clear around the world, right? With currencies clear around the world now, and it's all done in dollars. If they can come up with something and enough global South countries and maybe India or others decide to use that, they might be a rival reserve currency. The euro, again, a euro bond might do that if there is sovereign debt issuance across the European Union. So there are challenges, and recent US policy makes those challenges a good deal more potent, but they all face an uphill battle.
So am I understanding you correctly that you say the Chinese and the Russians in particular increasingly use their own currencies to pay for energy, for example, and that may develop into a second reserve currency after the US dollar, so that some part of the world will use, let's say, the ruble or the renminbi predominantly, while in the Western world would continue to use the US dollar predominantly. Is that what you mean?
Well, that is one option. Another that is more likely is that the Chinese and the Russians, and for that matter, many emerging markets will start to use a form of cryptocurrency called stablecoins, and we can talk about that in a minute. The United States has just passed a major piece of legislation designed to create a dollar-denominated stablecoin to prevent alternative forms of digital currencies that might circumvent the dollar. But the real threat is not so much the other nations, but an agreement to use alternative cryptocurrencies that then demonstrate, and I think this is going to be a big issue, that then demonstrate the resilience and liquidity support to support global trade, as well as be a secure haven for resources at times of stress.
You mentioned stablecoin. Explain to us what it is and what you mean by it.
Stablecoins are a real feature of the current environment, although they're relatively small. Sounds like a huge amount of money, but there's about $400 billion worth of stablecoins already in circulation. They are used principally for crypto asset trading. A stablecoin, if you all know, I'm sure, what a Bitcoin is and other forms of crypto assets. And they have widespread use, particularly, unfortunately, in the dark web and in illicit commerce. But there's also an increasingly active market in trading, lending, and speculating in Bitcoins. But the problem is, if I give you my Bitcoins and you take them and then you make money with it, and I want my money back, the Bitcoin value may be all over the place. It's highly unstable. It's very much a confidence game. Stable coins are a form of digital assets, which are theoretically, and this is a complicated question, backed one for one. In the case of the dollar-denominated assets, a dollar of a stable coin from an issuer would be backed by a dollar that is then housed in a reserve asset pool comprised of things like treasury securities. So it's designed to have real value in real dollars, so that when you trade or invest in stablecoins, you take much less risk. Now, and many other nations are building or launching, China has already done so, their renminbi-denominated stablecoins, and the race is on.
But a stable coin is a digital currency. It is not something I can put physically into my pocket, is it?
No, but how much fiat currency, the dollar, do you have in your pocket? I would bet very few of us have more than $100, if that, in greenbacks, in physical currency. Everything you have, Klaus, in dollars is a digit in your bank deposit account, is it not?
It tends to
Everything is
be
digital.
not quite right, but I can attest to you it's too little of it.
But that is really, the thing that's important to remember is that currencies are nothing but confidence. The dollar is the dominant currency because we call it a fiat currency, as I mentioned. And it is the currency the US currently requires us to use if we want to pay our taxes or get government benefits. That's really the only thing that sustains the dollar. Now, of course, that's quite a lot given the size of the economy and so forth, but it's built on the value, the confidence in the currency lasts only as long as we all have confidence in the currency.
And you see that currently there is a declining lack of confidence both in the United States, the rule of law in the United States, and in its currency, or is that just a passing phenomenon which always happens every few years?
It's never happened before. Now, whether it's a passing phenomenon in the United States and whether the respect in the world for our rule of law and predictable policy and independent central bank is returned remains to be seen. But this has not happened. The last global currency transformation, as I said, was 1946. Eventually it will happen. You know, there's nothing inevitable about hegemony, but the question is now or later, and I certainly can't answer that.
Mm-hmm. But if there's a lack of confidence in the US dollar, I'm sure there is not a greater degree of confidence in the Chinese currency, is there? Or in the ruble even?
Oh, not the Chinese ruble, but in gold, as I mentioned before, that's an alternative store of value. And the yen and the euro are taking bits of the pieces from the dollar. There was a bit of a financial kerfuffle 2 weeks ago when a couple of mid-sized regional banks in the United States announced some losses. And all of a sudden, you saw a bit of a surprising transfer of dollar funding into the pound, of all places, and in the euro, and even into French Banque de France sovereign debt. But that disappeared. There was just a little bit of that, then it all went back to dollars. We'll have to see. This is an emerging area. And to get back to your question about soft power, it's really vital to the United States. But are we abusing that exorbitant privilege by taking it for granted? I think in many ways we are.
Is the Trump administration concerned about this development, you know, that other countries are increasingly uncertain about what's happening in the US?
The Trump administration believes two things. One, that the United States is so dominant that no other reserve currency alternative is possible, and that the new US dollar denominated stable coins will take care of the more legitimate, if you will, needs for a digital reserve currency, which the United States does not yet have.
Would you agree with that assessment?
As I said, I think I am far less persuaded that stablecoins will have that strong dollar alternative resilience that Treasury Secretary Bessent and others have cited. He believes stablecoins will go, dollar-denominated stablecoins will quickly grow from $400 billion right now to his guess is 3.7 trillion. Now, I still think, as I said, the Treasury market it's, as a whole is, last I looked, which was a month or two ago, $29.7 trillion. So even if stablecoins prove as stable as their advocates suggest, and I'm not at all sure they will, they may help a bit, but they're not going to sustain the United States reserve currency if other alternatives begin to develop. Some have speculated, I don't know, this is far too early to tell, that because of the nature of digital currency and alternative power centers and the ability to clear outside of the SWIFT network, maybe there doesn't need to be a reserve currency at all. Maybe on the blockchain, we can just handle all sorts of exchanging dollars for South African or Australian dollars or Israeli shekels or whatever.
Mm-hmm.
Pesetas, pesos, whatever.
That's an interesting thought. You understand you recently had dinner with the secretary, with the Treasury Secretary. What kind of advice did you give him?
I did not. I met with him over lunch months ago, and I listened hard, and we talked actually more about economic inequality and domestic monetary policy. So the reserve currency issue did not come up.
All right. And you did not issue any advice to him
On reserve currency, no.
or on monetary policy?
I did a bit, and we shall see.
Tell us about America's monetary policy. Let's largely run by the Federal Reserve. How important is the Federal Reserve? How important is the chairman of the Federal Reserve? And will it matter if he gets replaced in March by someone who may have a very different conviction?
Monetary policy is made only by the central bank of each nation, and therefore monetary policy in the United States is made only by the Federal Reserve through a committee called the Federal Open Market Committee. The chair of the Fed and the 6 other members of the Federal Reserve Board sit on that Open Market Committee, as do 5 presidents of reserve banks. The Federal Reserve System, created in 1913, is far less centralized than the central banks in any other nation. But the chair of the Fed has tremendous influence. Typically, the Federal Open Market Committee debates and comes to a consensus, but it is heavily led and influenced by the chair, and whom the president decides to appoint. Mr. Jay Powell's term is over in May of this year. And so the next chair of the Fed will certainly be a person nominated by the president and confirmed by the Senate. It will, but Jay Powell is not going to be the next Fed chair. There are 5 current candidates. Each of them thinks somewhat differently than Jay Powell. And surprisingly, they think closer to the Treasury Secretary's perspective on issues like the size of the Fed's portfolio. But there is no difference between Treasury and the Fed on matters like the importance of the dollar as the reserve currency.
So does it really matter who is the chairman of the board, or is that just one like an primus inter pares who has similar powers to everyone else on the board?
Oh, no, it will be very different in terms of monetary policy, but for purposes of our discussion of reserve currency, I do not think it will make much difference. What will is any global perception that the Federal Reserve is no longer independent. Is remember what I said about the importance of policy predictability, the rule of law, and to the extent that U.S. interest rates are set for political objectives, not the Fed's best guess about the macroeconomy, there was much more risk in the financial markets, and people will take their money elsewhere. That's not so much, I should say, it's not so much the chair of the Fed that's going to matter for reserve currency. It's going to be the perception of how independent he or she will be from the president.
And you see that that will change dramatically because Powell is under pressure to be much more aligned with the White House, isn't he?
Well, again, Jay Powell's term is over in May. The next chair may or may not be seen as politically dependent in terms of setting interest rate policy. Anyone who is appointed by the president will be aligned with him on other issues. But if the view is that the new person will set rates based on political, not macroeconomic objectives, that will adversely affect the value of the dollar as a reserve currency. And there are varying views in the marketplace among the 5 candidates and who will stand up to the president and who won't.
You mentioned the independence of central banks, but central banks weren't always that independent. At the moment, I would say, you know, I think you're right that in most, certainly in most Western countries, central banks are fairly independent. But I think in Britain, for example, Mrs. Thatcher, was it her who introduced that? And before that, the Bank of England was really not that independent from the government.
That's correct. No, but but England was able to remain, the pound sterling was the reserve currency because Britain was so indisputably hegemonic. And the Bank of England was trusted. It was not independent, but it was trusted.
So what I don't quite understand is if in the past central banks were perhaps trusted, but they were not independent of the government of the day. And now we regret, or we say it is impossible that central banks do not remain their independence. Why is that suddenly a problem for us, while it wasn't a problem in the past?
Because markets have grown to expect it, and particularly with the Federal Reserve, they think it's vital. When the Bank of England, while it was not independent, it had nominally, it had tremendous discretion over interest rates. And the Chancellor of the Exchequer's influence over it was often independent of that of the Prime Minister. So it's complicated.
Okay, thank you. We had elections in the United States, in Virginia, New Jersey, and there were some other elections at a more regional, local level. And a lot of people express their dissatisfaction with rising prices, rising inflation. Is it the task of the Federal Reserve to keep that in check?
The Federal Reserve's legislative statutory mandate is to promote both maximum employment and price stability. And the Fed is very influential. It's not the sole determinant over those two factors, but it is very influential over them. But if you look, for example, at the spike in inflation that began in June of 2021, some of that had to do with the Federal Reserve's failure to move in early and begin to tighten monetary policy. Much of it also had to do with the enormous spending that the Trump administration and Biden administration did to support the economy through COVID, and then some of the giant spending plans from the Biden administration to fund scientific research and all sorts of other social programs. The government deficit shoots up, and that tends to be quite inflationary. Then the Fed cannot control that fiscal policy, which is taxation and spending, has nothing, the Fed has no control over that whatsoever.
And what about interest rates?
Interest rates are, the Fed has control, and even then not always the greatest, over only short-term rates. When you read that the Federal Reserve has changed interest rates by 1/4% or 1/2 percentage point, that's at the very short end of the financial markets. The longer end of the markets are much more influenced by demand for treasury bonds than by what the Fed does, as well as by the overall strength of the economy. Mm-hmm. The expectation is that the short end of what's called the yield curve translates into the overall slope of the entire interest rate curve, but that increasingly has not happened in the last few years. We had what we called an inverted yield curve.
Mm-hmm. So, thank you. Let us briefly go back into history. When you look at the Bretton Woods system, introduced in 1944 and it came gradually to an end in the early to mid 1970s. And the 50s and 60s and 50s and 60s were really characterized by a lot of stability and also fixed currency rates. Was that a golden age we should aspire to go back to? Should we link the currencies to gold once again? And some politicians talk about that.
Oh, yeah. I mean, they're called gold bugs, and there are more than a few out there. Richard Nixon, the gold-based currency system was flailing in any case through the 50s and 60s for a variety of reasons. Richard Nixon, because of the dollar's dominant role, when Nixon took the dollar off gold in 1971, that was the end of gold-based currencies. And what you've seen, going back to the question of the dollar's reserve currency status and its global influence, many nations, smaller nations, peg their currency to the dollar so that their currencies are fixed, but they're fixed against the dollar. And that gives the United States a still greater exorbitant privilege.
But it also means that they are totally dependent on the whims of the U.S. government and the whim of the U.S. Federal Reserve. Is that correct?
Well, I think it's a whim is a strong word on the nature of U.S. policy and the way it transmits into the global financial market. Markets sometimes correct for central banks, so you can see that from time to time, particularly at the longer end of the yield curve. But the value of the dollar does certainly drive the value of currencies around the world. It's intended to stabilize them, particularly in nations like Argentina, which are prone to economic mistakes. And it does have that stabilizing value because as a reserve currency, the dollar's overall value is among the most stable in the world.
Mhm. So there's no point, or it would be impossible to go back to a linkage of the US dollar with gold.
I think it would be extraordinarily difficult, and you would certainly have to come up with some sort of a formula that makes it in some way meaningful. And there now the value of currency in circulation, and I don't know what that number is, but it's enormous. And how much gold could you ever have that much gold? And if you don't have that much gold, then it's really symbolic, not actual. The gold linking the currency to the gold meant that you could literally, there's a room in the Treasury Department called the cash room, and you could walk in, put your greenbacks down, and get a greenback, the amount of currency you put down back in gold. We would have to have quite a lot of gold to do that, or come up with a formula that was somehow credible as a fix against all of the dollars in circulation.
Mm-hmm. Maybe I should ask you for some financial advice for myself and for everyone who listens to us. If you were to invest a large amount of money, where would you invest it? Would you go and think seriously of the US dollar, or would you think of gold? Would you think of the euro, or what would you do?
I would never even presume to give that kind of financial advice. I would talk to a skilled financial advisor and understand the risks of different options. There's no single answer because it depends in part on what your risk tolerance is, how much of a chance you want to take.
Well, assuming that no one here has all that much money anyway, so you can give us your advice without anyone rushing out and actually doing so. What would you say? Is the US dollar still a safe haven for investment?
Yes, I will say that. Whether you should invest in that versus other things, I will not say. I just think it's a dangerous business to give financial advice when one is not a certified or otherwise legally liable financial advisor, and I am not, so I don't want to get over my skis. But I think there is, while the exchange rate value of the dollar will vary, you go to Europe tomorrow, you may get more or less euros there. I think there's no doubt that if, for example, you invest in treasury bonds as a hope against your retirement, that I think is still a very secure investment.
And more secure than, let's say, the euro or other currencies?
I will not speak to that, Klaus.
Okay, thank you. I would like to remind our audience that please submit your questions to Karen Petrou. She's more than happy to answer them. I know it's a complicated issue we are dealing with today, but any questions will be welcome. And Karen is very good at explaining complicated things to us in a very straightforward way. Karen, if you were appointed to the Federal Reserve Board or to the administration, and you had some political influence by that new position, what would you recommend should be done? What should be changed? When you look at the way things are in both a financial and monetary way, what do you think you're not happy with? What should be done differently?
That's a very large question. I think I should make it clear, I'm sorry I didn't do so earlier, that the Federal Reserve has nothing directly to do with the value of the United States reserve currency. The only role it plays in supporting the dollar's role in the global marketplace is it has something called central bank dollar swaps. Because in the event of a financial crisis, and we saw this in 2008 and again in 2020, because so much global trade is done in dollars and individual nations or the European Central Bank control only their own currency, they may need to have enormous balances of dollars to be sure that the lights stay on in their global economies while a crisis is managed. So the Fed literally hands billions, hundreds of billions of dollars over to other central banks in the event of a crisis so that the dollar is always a stable store of value. But the overall structure of the dollar as a reserve currency depends, as I said, on the size of the economy, and the Fed does not control that. It depends on the liquidity of the dollar, which in part depends on the stability of financial markets, over which the Fed has some, but not overpowering influence. And it depends on fiscal policy in terms of the amount of currency in circulation and national stability, over which the Fed has no influence whatsoever.
Okay, thank you. Thanks for clarifying that. So when you look at the administration, you would advise the administration to on their economic policy. What would you advise them? How different should it be for the health of the nation and the world?
I think it is not a matter of advice. It's a matter of, and I'm sure it's quite, I guess I know that it is quite well understood across key parts of the administration that policy stability, predictability, and the rule of law are essential to the reserve currency status. You just have the president and other policymakers who think, for example, in tariffs, that they have other priorities and the reserve currency status is so stable that they can have their cake and eat it too.
Mm-hmm. Do you have a view on the imposition of tariffs, if that is a sensible policy or not?
I am not a trade policy expert.
But you are a diplomat. You try to sit on the fence.
I am no diplomat either. I'm probably the least tactful person you'd want to meet. I try, though, not to opine in forums like this on things where there are many. I think many of the people on this program are far more expert in trade policy than I.
Mm-hmm. So let me ask you, how much is American soft power really tied to the currency status of the US dollar? Because American soft power goes well beyond its currency. You know, think of Hollywood, think of Coca-Cola, think of its great universities, the education system, particularly at the higher level, American science, all that contributes to American soft power. So how important is the dollar for that?
Oh, I think it's really critical because I'm a strong advocate for the United States' leadership in biomedical research, for example, and that's being badly endangered by this administration through proposed a 40% cut in the budget of the National Institutes of Health, and growing concerns about the ability of the United States to support objective research in any way. But economics really matter. The size of the nation's economy, the vibrancy of that economy, the size of its trade, and the degree to which it controls key commodities is a vital source of soft power. But now the US, for example, has more power than we used to because we have an independent energy resource. We've developed, if not full energy independence, significantly more than we had, say, in 1974, when the Arab nations shut the United States down with an oil boycott. It depends. There's currency values are a critical part of soft power, but the overall structure of an economy and the dominance of its financial system matter at least as much.
Mm-hmm. Thank you. Can I ask if you have some questions, please? Andrew, do you want to ask a question?
Sorry. Yes. So Caleb Owen asks, would it be strategically sound for the U.S. to offer explicit guarantees on foreign central bank holdings to counter concerns about asset freezes?
The U.S. does, to support central bank dollar holdings, we have that swap facility I mentioned. So then in the event that a central bank needs more dollars, it gets those dollars. Importantly, it doesn't get them for free. If a global central bank like the ECB wants dollars, it posts collateral with the Federal Reserve so that US taxpayers do not take the direct risk of stabilizing the euro. I'm not aware of any proposals in which the Federal Reserve would guarantee foreign central banks and thereby foreign central economies. I think that would be an enormous stretch, because in financial markets, if you make a guarantee, you have to be prepared to execute it and commit it. So you have to have the resource to do that. And a hollow guarantee would be more dangerous than no guarantee at all.
Mhm. Thank you. We have talked about the euro quite a bit, the potential rival to the US dollar. Did the United States actually try to prevent the creation of the euro in the late 1990s, or couldn't they basically care about that?
My recollection, and I have to go back to thinking about the Maastricht Treaty, was the United States encouraged formation of the euro because it thought it would be a give the European nations much more stability and their own form of soft power, which was vital in that environment to counter Russia.
So with hindsight, that was the correct policy, or do American policymakers now have second thoughts about that, looking back?
It depends. In hindsight, you recall, it was very difficult for Belgium, for example, to counter the ruble. None of the European nations, with the exception of Britain, France, or Germany, had economies of any significant size suitable to support European and NATO through soft power. So I think it was a very sensible decision. If over time the euro overtakes the dollar as a reserve currency, that'll be our fault, not the European Union's or the euro's.
But that probably will not be the view of many American policymakers, I would assume.
But there's nothing, what would they do about it?
Mm-hmm.
The only constructive solution would be to do the best to make the dollar a competitive reserve currency, unless we were prepared to undertake some sort of anti-European covert market operation. And I think that would be quite unfortunate. There's very little the United States not only could or should do about it.
Is there a lot of cooperation between the currencies, the euro and the US, the Federal Reserve and the European Central Bank? Is at the working level, do they cooperate?
Oh, absolutely. But they don't cooperate. Currency valuation is a matter of national trade and Europe economic policy. But they carefully coordinate the Fed, the Bank of Japan, Bank of Canada, ECB, coordinate. They talk a great deal. Each makes monetary policy based on domestic considerations, but there is a great deal of interdiscussion. And because of the United States, the reserve currency, and the size of the US economy, Federal Reserve policy tends to drive global markets. So the Europeans, the Japanese, and others really want to coordinate with the Fed so that they're never surprised.
Are there currency meetings with the Chinese? Because of course,
excuse me, Cos, I don't mean, there are not currency meetings. I think I said that there is no currency coordination. That's full stop. There is none. What there is monetary policy coordination, and nothing is agreed upon. It's just the central banks talk about the ways in which they think monetary policy could be created in an effort to avoid being surprised.
exactly. And would that also be the case with maybe non-Western countries such as China? Because in other respects, of course, US and Chinese policymakers talk to each other, though they may not often agree, but they do talk to each other.
Oh, they talk all the time. I mean, there are delegations. I meet with them sometimes. They're here in and out of Washington all the time. But I think the question is, does the Fed coordinate and cooperate with them? And is it open with them as it might be with the ECB? No. Do they talk? Yes.
Mm-hmm. Thank you. Zoe, do we have another question?
We do. Annie asks if you see a scenario where stablecoin is linked to short-term bonds and where gold is linked to longer-term bonds to entice governments and entities to buy US debt.
Being linked to gold, I mean, the dollars, I think you're talking about it, in a sense, a collateralized sovereign bond, because the linking, I'm not even sure how one would do that, but linking, say, short-term treasury obligations to stable coins, well, that flips it on its head, because recall, we wanted stable coins investing in treasury obligations to make them stable. A US fiat currency dependent on stable coins at the short end of the yield curve would be highly risky, and I think would destroy a lot of the value in it. No one's ever contemplated anything like that. $29.7 trillion worth of gold would be a rather large amount to try to collateralize the entire issuance of treasury securities. So I don't think that's a very practical idea.
Thank you. Andrew.
Yes, one viewer asks, to what extent can the U.S. reduce its federal debt without harming economic growth, and which fiscal reforms are most politically feasible?
That's a tremendous fiscal policy question. The usual view is that the more federal debt, the weaker the economy, because remember that federal debt has to be sold to people. So if I buy $100 worth of treasury bonds, then I'm investing in the US debt, versus if I buy $100 in a corporate bond, say even Amazon, GM, whatever, I'm in giving the company money to put to work in the economy. So it's called crowding out. The more money that goes into a federal deficit, the weaker the economy tends to, growth slows.
Okay, Zoe, please, sorry.
We have another question that asks, could multiple reserve currencies make global finance more stable or less stable?
I don't know. We've never had that before. And I think I was thinking, cause I can go back to your question about the independent central bank and why didn't it matter at the Bank of England? Because I think it was important to remember that the United States didn't have a central bank until 1913. So the Bank of England, for all of its lack of independence, combined with Britain's hegemonic power, was able to dominate. The situation now is very different. The real discussion of if there's no reserve currency or multiple reserve currencies, under current situation right now, if I trade, one of the reasons, let me back up and say, the reason why 50% of global trade is done in dollars and all commodities trades in like oil and gas are done in dollars. Because if I give you dollars and I get dollars, then I'm not taking foreign exchange risk. Every day, the value of the dollar fluctuates vis-a-vis the yen, vis-a-vis the euro. And if you're trading in billions of dollars, even a small fluctuation costs you money. Now, foreign exchange trading, which is a $2 trillion a day market, the traders make money on guessing foreign exchange. But if I'm in the energy business, my goal is to make money selling my oil and gas, not trading in foreign exchange. And dollar-denominated trade reduces all that exchange risk. So if you had multiple reserve currencies, it's moving in and out of them is still costly and risky, because the relative value of each of those reserve currencies would fluctuate against the others.
But if that is correct, and I'm sure it is, the proportional percentage of international trade being conducted in dollar has declined. Why would that have happened if that is actually costly for traders?
It hasn't declined, cost. It's been relatively stable for years, and it hasn't declined as of the most recent Federal Reserve data. What has changed more is the percentage of reserves central banks hold in dollars. And as I mentioned before, there's a bit more gold in there than there used to be. But the percentage of trade conducted in dollars is remarkably stable.
Oh, I thought that more people are dealing in trading in rubles and renminbi, particularly regarding energy, than let's say 10 years ago.
Not that I'm aware of. Again, all of that was done in dollars until the U.S. sanctions in 2022, for the reasons I've mentioned. You now have, shadow trade, ships traveling around and alternative sources of Even cryptocurrency, people are paying for oil and bitcoins and things in certain markets around the world, but those are tiny markets compared to the overall global petroleum market.
Thanks very much. Andrew, we have another question.
Yes, Lily P asks, to what extent does U.S. monetary policy, especially long periods of ultra-low interest rates, undermine or reinforce confidence in the dollar as a global store of value?
It's a really interesting question. And at the time, the only time we've seen a prolonged period of ultra low interest rates was from 2008 until 2022, which sounds like a long amount of time, but in economic history, it's not that long. But in fact, US interest rates during that period were negative. In other words, if you adjusted the rates like a 2 or 3%, if you put your money in a bank, you got as an interest rate, you got 25 basis points, a quarter of 1% or less, and inflation was running around 2, so you lost money. But the reserve currency value is not based on the return you get on investing in dollars. It's based on the speed and the reliability of the dollar as a medium of exchange, which is as a way you can pay for things and trade in things, give somebody something and get something back in return on which you can count. And then secondly, as a store of value, not as an investment. You can always put lots of money in the stock market and make lots more money than putting it in a dollar reserve or a treasury bond based on usual interest. Well, sometimes you lose a lot of money in the stock market. So people put money based on their risk tolerance, which is why, again, I refuse to give financial advice. But the amount of interest earned on a deposit, for example, or on a treasury bond is among the least important in determining its reserve currency value as its reserve currency status as a source of as a store of value.
So investing is all about psychology and your risk willingness to take risks, is it?
Well, investment is about your willingness to make risk. Reserve currency status is about avoiding risk. It's an important difference.
Zoe.
Yes, I'm going to try and condense this in the best way I can. So a person is asking or saying that 70% of the federal debt is currently held by the public, including individuals and interinstitutional investments. If you suggested that investment in federal bonds will further weaken the economy, will the Fed be able to sell bonds to maybe the world?
I'm not sure. I'm not following that question. The Federal Reserve is the largest global holder in treasury bonds. Global central banks hold huge balances in them. I think the percentage of treasury debt held by individuals is quite small.
Thank you. The world currently is in turmoil, as many people say. We are in a transitionary phase. Would you say that also applies to the currencies we have been used to until now and the development of stable coins and other digital currencies? Do you see the future being dominated by digital currencies?
I think right now there is no turmoil in reserve currency status. There are fears that the dollar might lose that over time. As I said, the amount of dollar used as reserve currency is remarkably stable in recent years, including the last 5. Stable coins have an uphill battle. They have to become a significant alternative to the dollars you said you have in your bank account. You'd have to want to use a stable coin instead. A lot of people would have to decide they want to use stable coins instead of their dollar denominated directly deposited money. And that we're a long, long way from that. As of the most recent statistics I've seen, 2% of the American public in 2024 used crypto assets, including stable coins, for anything. It's still a very small percentage of the overall market. Maybe it will grow. That's what Secretary Bessent is counting on, and certainly a lot of investors in holding stable coins or putting money in the stable coin companies are hoping that, but it's still a very much of an open question.
And the future of crypto, you would evaluate in the same way?
Well, I mean, stable coins are a crypto, they're a digital currency, just like Bitcoin. They're all just, every one of them is different and they're used in different ways for different purposes.
Mm-hmm.
They've grown significantly, but as a percentage of overall assets in circulation or assets in stores of value like savings accounts or investment, they're still quite small.
Mm-hmm. We get, at least I get the impression when President Trump talks about tariffs policy, he understands what he's talking about. He understands the effects of imposing tariffs on other countries. When people talk about the issues we have just talked about, I wonder how much any president, be it Trump or Biden or Obama or anyone else, actually understand the technical details involved. So does a president really make that sort of policy, or does he entirely rely on advice?
I think it very much depends. I mean, the president, he campaigned on this, and when he was inaugurated, he announced something he calls the golden age of crypto. And US policy is now designed to further digital assets and cryptocurrency. And the president himself and his family have also significantly recently invested heavily in these assets. Or whether the policy is all, somebody understands them because the Trump family is making lots of money based on them.
Well, that's a good point. If he doesn't understand it himself, he certainly has good advisors who seem to make him a lot of money. Yeah, thank you very much. We are coming very much to the end of our Krasner event today. Is there anything, Karen, which you would advise myself and my students and the general public listening in, which we should pay attention to regarding the areas we've just covered in the last hour?
Well, I think you're all monitoring as I watched financial markets. You all very carefully watch global foreign policy, the role of the United States, how we exercise both soft and hard power. And I think the really important question, and I don't know the answer to it, is are the major changes in the profile of American soft and hard power and the manner in which it's being received in this country, around the world, and by our enemies, does that lead to a structural paradigm type hegemonic shift? Or will some of the turmoil that you mentioned before, Klaus, will things start to stabilize? I surely do not know the answer to that.
What is your inkling? Do you have an inkling about that? Do you have an idea or feeling about it?
Well, you said at the outside that you wanted to avoid vulgar political commentary, so I shall take that as my warning, and I'll keep those thoughts to myself.
This is fair enough. Let me thank you very much for finding the time to talk to us today. Thank you very much for all your advice to some extent, but certainly your practical experiences, which have informed us today, which have enlightened us today a lot about the currency, the US currency, and also about the digital currencies probably to come and to become stronger. So it has been a pleasure having you on the Krasner event series. Thank you very much, Karen Petrou. I hope you will stay in touch and perhaps will return to us sometime in the near future. I
look forward to that. Thank you.
You're more than welcome. I would like to thank Zoe and Andrew for doing the questions, and I would like to remind all our viewers that we have the Krasner Global Policy Forum on the 17th and 18th of November in person in the Wilson Library at UNC Chapel Hill. We have many prominent diplomats, military officers, and scholars come to us, over 30 actually, to talk about transatlantic relations, Russia and the West, and China and its allies and partners. So everyone is most welcome to come in person on November 17 at 9 a.m. Until then, thank you very much for watching and for listening in tonight. And more Krasner events are to come in the future. Good night, and thank you very much for joining us tonight. And of course, once again, thanks very much to Karen Petrou for doing such an excellent job of explaining very complicated matters to us. Thank you.